Welcome to Drill Down Earnings. We have the latest quarterly results from Tesla, second quarter earnings from this company. This is the business story behind one stock on the move. I'm Corey Johnson, the chief market strategist for Futurum Group. Tesla earnings, fascinating company. Elon Musk tends to dominate business news, headlines, and beyond. Tesla reporting Q2 earnings. Wall Street likes a beat or a miss. These were not really strong numbers. But let's dig into the business here, the actual numbers. When you look at revenues for the quarter, the company, it was a recovery from where they were, but for all of the initiatives that they like to talk about, robo-taxis and robots and AI, this company sells cars and they only saw 2% growth in revenues. And indeed, their car business is actually shrinking. 77% of revenues for this company is autos. For all the talk of leasing and energy storage and generation, I do want to talk about that, services, and yes, regulatory credits that have often been the vast majority of profits and then some for this company. It's really about selling cars, and they're not selling as many as they used to. EV sales are up in America. All the other EV makers are doing well, some much better than others, but Tesla is not, dragging down the whole sector with it. Now, the one super bright spot in this quarter was their battery and solar business, once acquired from the company SolarCity, which was a separately traded company that was having a lot of troubles. Tesla went in, bought out all the shares and bought out the shareholders. Yeah, Elon Musk was the biggest shareholder, but Tesla bought out SolarCity, and that business was really in the tank until this quarter, a sudden turnaround, 100% revenue growth for this sector. That again was a small part of revenues for this company, but a lot more than it was. It was 8% of revenues, but a lot more than it was just last quarter, and fantastic growth there. Now, I want to talk a little bit more about what's happening in the industry, because there have been a lot of headlines about the struggles in the EV business. And yes, the revenue growth has slowed down a lot for everyone in the industry. But what's really happened is Tesla's growth, the numbers of units sold has gone down. Everyone else is seeing them go up in the US. And we know that that persists elsewhere in the world as well. The other interesting change here from this company from a long-term perspective is that they used to really rely on government subsidies, payouts, and refunds, and just getting paid to make cars, whether they sold or not, at a profitable level. They got money from the government. Those government payouts are now down to 2% of revenues. Only a few years ago, they were well over 300% of profits. Now just 2% of profits, I should say. So big difference there. So let's look at after hours trading. The stock was down 4%, but it's up quite a bit, as you can see from the chart, in the last few months. But for the year, the stock is still down 5%. So while it's recovered somewhat, still down 5% for the year. Now, Elon Musk, in his prepared comments, they never sound too prepared with him. And what we heard early on at the conference call, he talked about AI. He talked about autonomous robots and the $1 trillion market it might someday represent. Sounds crazy, he says. So I don't have to say it. But I thought it was interesting to hear what he had to say about the energy business, how it's growing. And he now claims that a business that was growing in single digits only 12 months ago is now only constrained by capacity. Here's Elon Musk.
For the energy business, this is growing faster than anything else. We're really demand constrained rather than production constrained. So we're ramping up production in our US factory, as well as building the mega factory in China that should roughly double our output. Maybe more than double, maybe triple potentially.
All right, so what's it all mean? What's the thing you want to remember about Tesla revenues and Tesla's second quarter earnings? I'm going to give you some sort of cocktail party talking points so you remember what happened in the second quarter with Tesla, with the Drill Down Earnings Bite right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, so Tesla just reported their Q2 earnings. Here's an essential summary, the Drill Down Earnings summary of what you need to know from this company. So $25.5 billion in revenues, but fundamentally, it's just not much growth for this company. In fact, it's single-digit growth when this company reliably for years, grew at double digits. But I promised you the bite, one number that tells us a whole lot. And that number is 38% growth. That's what's happening in the US for the rest of the EV business. It's Tesla that's shrinking. There was 38% unit sales growth for the rest of the industry, according to Cox Automotive. But for Tesla in the last year, a 6% decline. All right, thanks for listening to Drill Down Earnings. I'm Corey Johnson. And of course, you can check us out, X at Corey TV, at Drill Down Pod, and TikTok and Instagram, and of course, the 6.5 Media channel on YouTube.